So in the last lesson, we introduced the concept known as accumulation and distribution. So what is it that offsets accumulation and distribution? This is support and resistance. So what is support and resistance? Well, support and resistance are basically levels which have been created on our charts, which price will look to respect those levels in the future. So let's add our first level of support. We are going to attach our first level of support to the swing low of the move. And we're going to attach it using the magnet tool for precision to the very low point of the wick. We are then going to add our resistance to the exact opposite of that, which is the very high point in this move. We've now added our basic levels of support and resistance. So why is this support, you may ask? Well, this is kind of where the psychological aspect of trading comes into play. So support and resistance, they are basically levels which become targets in price action. So a level is created and this level becomes a point of interest in the future where traders will look to re-enter or make their next move at these levels. So you could almost say that traders develop a zone which can be respected in the future so they can then play the markets and re-enter at these precise moments. Now, support and resistance becomes an exact and intricate science, and we will be teaching you that exact science, but let's now start with the basics. So as you can see, we've entered our first levels of support and resistance. So actually, we are now going to expand upon this knowledge, and we are going to add to this. This is going to be the swing low of the move, known as support. So we have swing low support, and at the top we have swing high resistance. We're going to have swing high resistance. However, there are 4 levels that we are going to be looking at. 4 basic ways of marking out our support and resistance. And we are going to focus on doing this on the highest time frame first before we then go into the lowest time frame. So always practice this to begin with on the highest time frame. So we're going to add 2 more levels to our chart. So the next level we are going to add to our chart is going to be the swing high of the swing low. So we've marked now the swing high point of this swing low candle, and this is going to be labelled as swing high, L for low, and this is going to be resistance. And we're going to do the exact same to the opposite side. We are going to add our level of support on this side of the move. So where we have resistance up here, we now have the swing low of the high, SLH, as support. So we now have 4 levels on our chart which show us support and resistance. So now we have begun to create these zones on our chart. And if you think back to lesson 1, what do these zones begin to look like? What does this zone down here begin to look like? If we mark this zone out, we can create this zone. Well, this zone begins to look like what? It begins to look like accumulation zone. And if you think about how we have been then in accumulation for 1, 2, 3, 4, 5, 6, 8 months, once we break that accumulation, what occurs after accumulation phase? You end up having a breakout moment and you move up. And in general, although not a static rule, the longer you are in accumulation, the bigger the move up is going to be once you break that accumulation. That is how support ties in with accumulation. So now this level up here, which created distribution, will have been created due to a fractal level inside of this candle. However, that is a deeper level of knowledge which we will progress to in the future. So back to support and resistance. Now, this purple candle here is a distribution candle, which is known as an establishing candle, just like this green accumulation candle is here. And this is known as an establishing candle because it is able to establish a zone which is going to be fought for in order to create the coin's next move. And this zone is created by these levels of support and resistance which we have marked. So this zone, which has been created, helps us then to identify whether this distribution, which we've seen here, this big move down, has ended. Now, if price was to come down here and we end up creating this zone, and then we end up losing this zone and we move down, well, what we can establish from that is that this supporting level, this yellow support level, was not strong enough to support the move, and therefore is likely having to head down to a lower target to then again try to re-establish another zone which can create accumulation and then reverse that distribution which we are seeing. So let's look at how well our levels were respected. Now, as we were moving down, once we start to see this accumulation form here, it could be a signal that this low is in, and therefore we can create our swing low support. If this was a purple candle, we could not have given this support yet because we have not seen the pullback. Now that this accumulation candle exists, we have seen that we have a movement up, and therefore we have a swing low support, and we can mark our swing high as resistance, and therefore we would have initially created our zoning here. Then you can see how many times this is respected. You use support here, you use support here, you have resistance here, resistance here, resistance here. So on more than one occasion, you can see just how well these levels are respected. Once you then break out of this resistance, and remember this is a monthly chart, so it's a lot of price action, you break out in a big way and you move up to, like we say, a target up top. And the exact same occurrence occurs here now, where you have your supporting level here, and this is going to look to support the move. So what we can do is we can play this out. It's going to look to support the move. It comes down, and as you can see there, look, comes down, hits the level, moves back up as support. Once it loses this support, you then may ask, well, where is it going to head? And that is the next nugget of knowledge we are going to discuss. When you break a level of resistance like this, that very same level flips and then just becomes your newly found support. So this, as we have marked up as resistance, then becomes support once you have broken it. So these levels are very dynamic, so it actually becomes now support. So once we break this, we may use that level as support in the future. So we're moving down, as you can see. Again, the supporting level still holds for now. And we move down, and look what level we go after. Perfect. We hit our support level. Now, just prior to that, if we move back here, well, what happens if we lose this support? What would that then do? It would turn to resistance. So this level now becomes resistance on our charts. So we have resistance. And then look, if we play this out, we come down, we hit support, we go up, we hit resistance, we come down, we hit support, we move back up, we hit resistance. So you can just see how well these levels are respected. 4 levels on our chart, and you are seeing just how well these high time frame levels are being respected, and how these levels move our charts. So that is basic support and resistance.